Recession fears are growing among the world's biggest asset managers, with investors signaling the likelihood of a downturn now at 52%, according to findings from Absolute Strategy Research. Joining us now is Courtney Dominguez, financial advisor at Payne Capital Management, and John Petrides, portfolio manager at Tocqueville Asset Management. It's good to have you both with us. Very differently, I anchored the morning show, and we had a nice rally, and then things started to change about an hour ago. Courtney, I'm going to start with you. Is this all about politics driving today's market action and talk about possible impeachment?
Well, this has happened several times over the last couple of months. Anytime the trade wars hit the news, the markets are going to trade on that. And I think it just goes back to, if you look at a lot of the underlying data on how the economy is doing, it's doing really well. You just have the uncertainty of not knowing what the trade wars, when they're going to get figured out, if they're going to get figured out, because it's just the uncertainty before investors are willing to put their cash to work or businesses are willing to reinvest into those businesses. So that's really what's on investors' minds right now.
Nancy Pelosi expected to announce later today whether or not impeachment proceedings against President Trump will go forward. If they do, what happans to this market?
Yeah, clearly I think you see that with the market being off 1%, to your point of a turnaround, because now you're adding political risk as a new, or reigniting political risk as a new variable for investors, which when you add in all of the downturn that we saw last week of, tensions now in the Middle East, FedEx coming out talking about a global slowdown with their earnings, the Federal Reserve cutting interest rates, global central banks cutting interest rates. There's a lot of fear out there in the market, and I think this is another variable that's reigniting its ugly head.
Is the glass half empty for you? Because I'm hearing some pessimism here.
Clearly, I mean, in terms of the political angle, or in terms of
the health of the U.S. economy. I mean, because we've gotten some numbers lately from Europe, manufacturing numbers. They're not looking very good. Clearly, some issues there. Germany in recession. How long before that starts to spill over here?
Yeah, I think there's two tracks that you have to look at it. I do think that the global economy is either in or near an industrial recession. Right, we're seeing the prices drop in commodities, and we're seeing the global slowdown, particularly on the industrial side. But the U.S. consumer, which is 70% of our economy, is holding in really strong. I mean, yes, confidence was lower today, but by and large, the U.S. consumer is employed, wages are growing, savings rate is at an all-time high. There may be some confidence going on, concerns, but out there, the U.S. consumer is spending money.
But doesn't it start with confidence starting to get a little shaky? We start to see cracks in that, and then perhaps the consumer is really not the backbone of the strength of our U.S. economy, and then we really need to worry, do we, Courtney?
I have to agree. The consumer is driving our economy right now. And yeah, we can look at things like manufacturing data, but the U.S. is really now a services economy much more than a manufacturing economy. And I think at the end of the day, what's really interesting is, yes, investors are nervous, and there are record levels of cash right now. There's over $3 trillion in money market funds. But eventually what you're going to get is that FOMO mentality. And as you keep seeing surprises of the positive, that money is going to go in, and that's another catalyst to bring the markets higher.
Do you think, let's talk trade for a moment, because how much is that playing into all this? You actually had something in your notes. You said that one of the biggest sort of surveys out there about whether or not people like Trump is the S&P 500, at least according to Trump. Do you think that we're going to have some sort of a deal, even if it's not the one that Trump initially laid out before Election Day, simply because he wants to get reelected? Yeah,
no question. I think in terms of trade wars, they're not going away. I think what the best idea is that both sides take a step backward. Right? Meaning the U.S. comes off from $300 billion to $150 billion, and the Chinese come off from, $100 billion to $55 billion, and both sides take a step backward. I don't think both sides will concede entirely. I think they will ultimately come to some negotiation, but trade wars are not going away. What we're telling clients is don't trade on the rumor. Don't buy the market because there's hope that Larry Kudlow says something about possibility of a deal getting done. And don't sell the market because of maybe a comment that the president makes. You have to wait and see to what the results actually are.
So what, trade on fundamentals like earnings maybe, Courtney?
Exactly. Yeah.
Which we're going to start getting in earnest in a couple of weeks when Q3 earnings come out. What are your expectations?
Yeah, and I think it's something we're going to be watching, because it's not just how earnings are getting reported, but I think it's the guidance forward-looking of what these companies are recommending. That's much more actually what the markets are focused on right now, because it's not just, how have we done the last quarter? It's how are the trade wars going to affect us if it continues? And that's really what people are focusing on. So I think that's what we're going to need to be watching.
What about the Fed? How much is the Fed part of this equation in the fourth quarter? We have a very split Fed right now, and should we be concerned about that, or is that a healthy thing?
Yeah, I mean, I'm happy that the Fed is reducing responding to economic data. But my fear is that the Fed waits too long, that the economic data sells off too much, that the Fed then starts getting more aggressive on cutting rate if it's too late. So I would like to see the Fed be a bit more proactive than they currently are, because inflation globally really is non-existent. So if they're trying to prevent inflation, why keep interest rates higher than they need to be?
What are your expectations for the Fed for the rest of the year? Do they stand pat? That's what the dot plot seems to be telling us.
Yeah, and I think what's kind of interesting is we are starting to see inflation tick up. It hasn't happened yet, but I do think we could see that happen. I mean, if we think about a year ago today, everyone's odds were that interest rates were going to go up several times this year, and now they've come down. So I think everyone's expectations are going to keep going down, I think is maybe a little bit too optimistic. So I think standing pat is probably more realistic, but we're really going to have to see where they go.
All right, Courtney, Dominguez, John Petrides, thanks so much for joining us today.
Thanks for having us.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.